Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. September may have been our last month of relative peace. We're now mere weeks away from Labour's first budget, and chances are whatever's announced will have a dramatic impact. An impact that will linger into 2025 and beyond. Most of the commentary out there is pessimistic about what's on the way, obviously. But the economy itself is actually fairly stable at the moment. Looking into things, there may not even be much of a need for such dramatic interferences from the state in the first place. Our key economic indicators, while not blowing anyone away right now, do evoke a sense of calm. So GDP eked out 0.5% growth in the 3 months of July. And of course, inflation hasn't moved from 2.2%, which in turn encouraged the Bank of England to hold the base rate at 5%. So at least things aren't going up. And speaking of the Bank of England, it actually recorded the first quarterly increase in mortgage approvals in a year recently, jumping by about 11%. And why wouldn't these approvals jump with what we're seeing in the actual property market? So according to the latest ONS data, house prices grew by about 2.2% in the year to July. And Halifax's own house price index found that the average house price hit a 2-year high in August, sitting at just over £292,000. And also, Rightmove recorded that the average price of a property coming to market for sale this month in September rose by 0.8%, taking it to, again, just shy of £371,000. So house prices are actually on the up despite everything. And things are looking good in the residential market. But we have to also ask, what other opportunities are out there at the moment, just bubbling under the surface. We're looking into things. Actually, somewhat surprisingly, the commercial market is slowly but surely making its comeback. Savills reported this month that cross-border investment into UK commercial property, to the commercial real estate market, hit $14 billion US dollars in the first half of 2024. That's impeccable timing as well, considering the collective pushback to the office is gathering force. So a recent survey from KPMG caught my eye, and it showed that bosses across the country are confident that a full return to office working is just around the corner. Some 82%, just over 8 out of 10 of chief executives expect pre-pandemic norms to return within the next 3 years. But if we look back at housing, multi-unit freehold blocks, MUFB assets, they are actually proving especially popular with property investors at the moment, seeing a 14% rise in interest year on year. And actually, ideally, if these MUFBs could be around the corner from a pub, that would be especially ideal. Jackson Stops, the estate agency, they surveyed its customers and found that the humble pub is actually the most important lifestyle feature for about 75% of the nation. And on this, actually, our latest report also looked into what UK buyers want from their homes and locales. And true enough, access to local bars and other amenities was particularly important to about 70% of our respondents, which were nationally representative across all age spectrums and genders. And speaking of our results again, they featured heavily in a CPD article we recently did for Financial Reporter. So if you need to top up your hours, any brokers out there listening, head on over that way and see if you can get the extra, 30-minute CPD that we can offer you. Elsewhere, a few first-time buyer hotspots actually emerged this month. According to Halifax, Manchester, Slough and Sandwell, they're proving particularly popular for those getting on the ladder for the first time. And it may be worth having a think about those first-time buyers out there, because according to UK finance data, lending to first-time buyers has actually risen in recent months. And with the rise of first-time buyers, new builds may also get a new lease of life here. We all know there's urgency to get building out there, and thankfully, there's some evidence to suggest that this is being taken seriously, both in the private sector as well as the public discourse that's out there. A mortgage solutions poll found that 31% of brokers are seeing more new build incentives from house builders. And side note on this, I am curious, are you seeing any incentives from house builders out there? You seen any push for more development? At MFS, we'd love to know, and as always, you can reach out to us, and we'd love to get your insight and your take on what's going on in the market, and just share your experiences with us. But with all this development, all this movement in the market, what's becoming clear is that certain incentives are going to be needed to support all of this over the coming months. Simply put, buyers and investors are going to need to be encouraged to a certain extent, considering what we're seeing from Labour. So our housing minister, for example, Matthew Pennycook, he reaffirmed the government's commitment to bringing the leasehold system to an end. And elsewhere, actually, the Renters' Rights Bill got introduced, a continuation of the Renters' Reform Bill. On this as well, on the latter, everybody is focused on how this may hinder the buy-to-let market, obviously with restrictions that come into play, and it may force more landlords to head for the exit signs. And maybe this will happen, but looking at the other side of that coin, maybe that will create plenty of opportunities for buyers. And despite everything, the rental market itself is actually also very strong right now. You can't get away from supply and demand, and there's over 20 applicants competing for every rental property out there at the moment, according to Zoopla. Average rents are at record levels, and yields in student towns in particular are reaching nearly 10% in places like Stoke-on-Trent, Liverpool, and York. And if there's one thing England and Wales isn't short of, it's university towns. The buy-to-let market in the right places is offering opportunity alongside rising stock levels as well. Rightmove data shows that 18% of homes currently for sale were previously available on the rental market. This will surprise no one considering what's been in the news, but back in 2010, it was only 8%, showing how much this has changed over the long term. Things may be tricky for landlords at the moment, but that doesn't mean they're devoid of options or support. For instance, Paragon Bank, they found that portfolio landlords are incorporating more properties into limited company structures, likely to cut their tax bills. And also, the government has announced a new Warms Home grant scheme, which is designed to help landlords with the oncoming EPC changes, deadlines that are on their way. Now, we can't advise you on whether these tools or routes can or will work with your circumstances. As we say all the time, we are specialist lenders and we are not investment advisors. But we may be able to help you with your investments once you've made up your mind on what is the best route to take. For instance, we can happily work with limited company structures, public companies and SPVs and all that jazz. And focusing specifically on the specialist market now, second charge business volumes jumped by 25% in July, another area we're more than familiar with here at MFS. But interestingly, the number of second charge mortgage brokers has actually dropped by about 10% around the same time when compared to the pre-pandemic figures. So for any brokers listening, maybe this is a part of the market that's kind of ripe for cornering. Looking at specific companies, Airbnb also caught my eye this month. The company, it's kind of just come back swinging. Its impact on the holiday let scene, especially in the post-pandemic few years, around 2022, was lamented for destroying towns and cutting stock for locals and all the rest of it. But an EY study released this month, released in September, admittedly commissioned by Airbnb, found that the firm had little to no significant impact on the price and availability of housing in the UK. And in fact, it found that over 95% of house price increases could actually be attributed to factors unrelated to the short-term rental market, such as increases in income and inflation and all the rest of it. So off the back of this, Airbnb started to push back against some of the criticism it's received in recent years. And the company highlighted all the economic benefits it brings to the communities it operates in, more jobs and high revenues. Moreover, the CEO of Airbnb, Brian Chesky, revealed plans to go into longer-term property rentals, a new market for the firm. So Airbnb could have a second wind soon. And as a reminder for any holiday let investors out there, we can work with Airbnb properties as well. And finally, I'd also just like to focus for a little bit on my hometown of London. Some major changes could be on the way, which will not only dramatically impact property investors in this town, but also shake up the very fabric of the capital. So a Financial Times feature shed light on how the most luxurious streets in Mayfair are going through a drastic remodeling. There's plenty of residential and retail developments in the works at the moment. And investment is just pouring into new apartments, restaurants, hotels, you name it. And obviously this is a part of London that has plenty going for it already, but a new era could be on the way. Also, Sadiq Khan, with a Labour majority behind him, may finally be able to pedestrianise Oxford Street. It's been on his to-do list, bucket list for a few years now, but I have to admit that the mock-ups do look impressive, and there's plenty of support behind them these days. Both of these developments, though, in Mayfair, Oxford Street, they're going to take several years, and that's something I want to emphasise. Investment projects, they're usually long-term endeavours, obviously, and they pay off for those who are patient. It's why when looking at all these headlines and looking at all the news, it's always worth incorporating any sort of short-term pain that may be out there into a much longer plan. Whenever looking at a scary chart, it's always worth zooming out, taking a step back, looking at how house prices have risen over several years and not just a few months, and how rents have increased. And we're here for the short-term side of things, but this is a long-term game, so to speak. And with all that in mind, I'd like to wish good luck to you and your clients ahead of the budget. Remember, whatever's on the way, we're here for you. Keep calm and carry on. And I will see you next month. Thank you. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.